This is The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. We're going to be talking about real money today. Gold, silver, maybe we'll get into some natural fancy colored diamonds as well, generational wealth. But gold and silver have been having a great week. And again, the number 18778 Silver, the website guildhallwealth.com. Jerry, what do we have coming up in the show this week?
Well, we're going to be focusing on many things. We have so many things in front of us, Jeremy, but specifically we're going to talk about the Fed, which is the Fed meeting coming up next week. The Silversqueeze is still on, and Guildhall has silver and gold in stock. China, a lot of news out of China regarding their imports and crypto markets, and just a move, a huge trend of countries and now people moving away from the U.S. dollar. So a lot in store for us today.
And of course, it has been an interesting week. Silver, apparently, we are back to square one. We've made back the losses at the beginning of the year. Gold still has a lot to make up. I think we're down 8% on the year so far. Given the fact that gold was up something like 23 or it was over plus 23% last year. Great move. We got up into the $2,100 level, pulled back into this low $700 level, and then now we've slowly been creeping up back near 1,800, which I think is very positive for the market. But what are people missing right now that they're not paying attention to it?
The whole volatility that we saw in precious metals had nothing to do with the psychology of the people in the market, the participants in the market. The volatility came from the algorithms that told the computers to sell gold and silver because the 10-year treasury yield was rising.
Right.
That's it. So what we have to take away from this is we have an opportunity to now, get the silver, get your positions in, analyze the trends that are coming out. For example, from Salente, huge moves away from the U.S. dollar. People are preparing for another round of volatility.
Let's talk about some trends. The trend is your friend ultimately, and we know that the trend of the U.S. dollar is down. Most currencies around the world, I can't think of a positive currency. Can you think of a positive currency, one that's screaming great value right now?
No.
So they're all going down. That's the trend there.
That's the trend.
The other trend is central banks are continuing to buy gold. That's another huge trend. You have to wonder, why is it that you're seeing all this gold volatility? Meanwhile, the central banks continue to acquire it for themselves. I thought it was a barbarous relic.
Not for the banks, not for smart money, not for the central banks. The IMF reported this week, they recently reported that the global share of U.S. denominated exchange reserves, which is the U.S. Federal Reserve notes, exposure to the U.S. dollar and such assets, have dropped by 50% and are sitting at a 25-year low. So there's a huge trend. We talked about this a couple weeks ago. I brought up the fact that the Russian central bank has notified their pensions to load up on gold. Similar, we're seeing Hungary do the same thing, Turkey. So the central banks around the world are acquiring, but not the BOC, Bank of Canada.
Another trend is inflation. I think it's one of the most popular search words on Google lately, as far as it's been more popular as a search term than over the last decade. So this is something people are concerned about. This is a definitive trend. Inflation. Now, anyone who's been listening to our show for the last decade knows this is a big topic for us, because for us this is about real world return. When the bank is telling you or the central bank is telling you inflation's at 2% and you're getting less than 2% at the bank, but then you go to buy your groceries, fill your car up with gas, pay for the kids' daycare, whatever it is, insurance, energy, all of these things, all of a sudden you say, what? 2%? Are you kidding me? Maybe in 2003, 2004, you could get past getting away with that. But by the time 2013 came around, the jig was up. And now we're sitting here in 2021 after a pandemic, and you have to sit there saying, how are they going to pay all these debts? Well, the way they're going to pay those off is by inflating it away. In other words, making the purchasing power of the dollar disappear. Well, that leaves us holding the bag. So inflation is a huge trend.
And that's it. We need to break down. We throw that word, the the world seems to be throwing that. The mainstream throws the word inflation without breaking it down. And what is the end result of that? We're losing purchasing power. The currency is being depreciated year over year, about 11% year over year in all major currencies versus the standard of gold and silver. Our currencies are losing value, and it's important that we address this topic. What is inflation? And what are the effects of inflation? And how do I protect against inflation? And that's what people are coming to Guildhall. And we have to break that down. I'm not sure if you're going through the same exercise with a lot of people.
Yeah, because ultimately what's the benefit of the past decade or so of low interest rates has been, after 2008, interest rates came down. I mean, after the dot-com bubble, interest rates came down to zero. What was the benefit? Oh, we can buy more house. That obviously pushed into the subprime market, which ended up being a debacle, and we almost lost the financial system. Okay, they got out of it with this thing called quantitative easing and lowering interest rates again back to near zero. They jawboned, threatening that they're going to raise the rates again, and now they don't want to raise the rates because you have to service the debt somehow, and you're going to do that with lower rates. So the benefit has been lower interest rates for a while. But that has bled into massive risks into real estate, for example. Stock market is incredibly overvalued. There's a lot of crowded trades out there, if you will, whether it's real estate, stock market, cryptocurrencies. The question becomes, this has got to end somewhere. Inflation is how it's going to end. There's going to be a pullback, and the boat is going to be sinking. And which boat do you want to jump into to get off the sinking boat? Do you want to get into the one that's crowded, or do you want to get into the one that not everyone's paying attention to except central banks, apparently?
Not too many options. Yeah, what is that lifeboat that we're going to jump into? There is, as you mentioned, the stock bubble, house bubble, debt bubble, crypto bubble. This is a debt trap. You can't grow your way out of this. You can inflate, you can tax. We saw capital gains in the US has nearly gone up to 44% on capital gains. Great job. We boast 50%, I believe, here in Canada. So you could tax the way or default. Fed is talking next week. Next week, the U.S. Federal Reserve is going to be heading towards their policy. We probably won't see any changes, keeping rates low. They actually said that there's I think it was the Wall Street Journal or Daily FX, the Fed fund futures will see a greater than a 90% chance that rate markets will be on hold throughout 2021. So they cannot raise interest rates. Where's the growth coming from? What boat are we going to take, Jeremy?
How do you couldn't raise interest rates before all of the money you put out because of COVID. How are you supposed to raise interest rates now after you've printed? The Fed's balance sheet went from like 4 trillion up to 8 trillion. I mean, how come who could possibly think all of a sudden they have the ability to raise interest rates now? Mm-hmm. They couldn't raise rates when their balance sheet was 4 trillion. How do they have the ability to raise rates now that their balance sheet's plus 8 trillion? And it's only going to keep growing. The debt in the U.S. is only going to keep growing. How do you get out of that? This whole thing is absolutely ridiculous. Debt to GDP. You can't grow out of this. You can't produce enough in the economy. And when you're going to start paying people to stay home, if you want to talk about universal basic income, you can't get people to go to work.
Yeah.
How are you supposed to grow?
Where's the incentive?
Where's the incentive?
None.
Right? You can't hire people because they won't show up. So what's the point? How do you get your economy back on track? I mean, just besides just reopening again and some people being able to go back to work, but there's going to be swaths of businesses that have closed. Now there's benefits. Some people become successful through that, like plastic makers, mask makers, things like this. But ultimately, the economy can't grow out of this inflation, so they have to get rid of the debt somehow, and that's going to be from devaluing the dollar. Mm-hmm. This couldn't be more simple. The problem is that people look at the physical gold or physical silver and they say, there's a cost to that. I don't understand. Why would I pay $5 over spot to have silver to protect myself?
It's insurance. You pay for insurance. Doesn't matter the cost. You require insurance. And with the amount of derivatives out there, ladies and gentlemen, there is a huge risk coming from the top down from derivatives. We have shadow derivatives, reported derivatives, unfunded government liabilities. And if we refer to Exter's pyramid of money, sound money, power money is your bottom, your gold and your silver. If you do not have physical gold and silver, you are open to all of those risks, crushing your portfolio, crushing your freedoms. And their only way out is through gold and silver. We have to ask ourselves, why the central banks right now? Why are countries loading up the boat with gold and silver? Are you? Are you Canadians? I hope so.
And with Guildhall, it's very easy because we only deal in physical precious metals, LBMA approved. That means globally recognized brands that all meet the same quality criteria, that all source their product ethically, that can all handle global trade. So they're very large refiners, large mints like Royal Canadian Mint or Pamp Swiss or Valcambi, etc. And so we only deal in the brands that are going to be the most easy for you to liquidate down the road, that you could sell anywhere around the world, sell to any dealer, very, very liquid product. And with Guildhall, it's all physical. Whether you're buying direct, coming to the office to pick up, or we're shipping it to you through an order through our e-store, or you're storing the product in our vault, which is an IROC approved independent vault outside the banking system, or even direct ownership of physical precious metals stored directly in your RSP. The number 18778-SILVER, the website guildhallwealth.com. We'll be right back. Welcome back to the Real Money Show. The number 18778-SILVER and the website guildhallwealth.com. For this segment, we're going to discuss just how undervalued gold and silver really are. I think some people, maybe they've been holding it for several years, Jerry, and hey, the price has moved up, so they've reached a new level. Things look good. The gains don't look as good as some of the other investments out there, but that might not be the point in this case. But still, I feel like we are waiting for the big one.
The stage is set for the big one. With debt levels the way they are, with supply at extremes, shortages, and huge physical demand, the stage is set for silver and gold.
Yeah, you know, there is an article that just came across through Silver Watch saying that global silver demand is poised to rise this year, and prices could jump more than 30%. Now, that's because you've got renewables. You've got things like needing silver for electric cars, needing it for solar power, needing it for wind power, all of these new technological advances for silver, Tesla, sure, that ultimately anything that is in our daily lives that is digital or electronic has some silver in it, and that's not going away. That's just going to keep growing.
I read that article. It was actually a Wall Street Journal article. So they mixed a lot of truth with some opinion, and their opinion of 30% I think was a huge lowball figure, citing all of the strong fundamentals with something with so much utility, with very little supply, knowing that mines have shut down, knowing that the LBMA said they were 2 weeks away from a default. 30% for physical silver with huge potential and a huge future ahead. The Wall Street Journal is just doing one thing. They want to be in the game. They don't want to be the ones left out saying, oh, we never knew about silver. No, they're talking about silver being bullish and being bullish on silver, but very, very much of a lowball figure.
I hear what you're saying. I think not just in terms of the lowball figure of a projection, but in some ways the lowball figure of what we've seen occur in gold and silver over the last year. You know, winners wouldn't sit on their laurels and say, oh, I made a 30% gain in the market last year. No, it's where can we go next from here? Because at the end of the day, gold and silver moved up significantly last year, but the premiums are still high. So we didn't work off any of the excess demand. And the only way to reconcile this excess demand is with much higher prices. Now, you've got lumber's up 300%. You have energy costs are up. You have the cost to do anything is going to be much more expensive. So is gold making that much in the mining? Are they going to bring out that much gold because people are worried about inflation, that they're going to be flocking to gold? At some point here, people are going to realize that the investments that they currently have are not actually ensuring their wealth. They're not going to realize that till things are starting to fall down. That's when you realize, oh my gosh, I need insurance. My house is on fire. Too late. Too late. You need to be in there early. Now, we've got these high premiums, which is just an indication of the fact that the paper price is too low against the physical. So again, just how undervalued is gold and silver. If last year silver went up 45%, and at a minimum, Wall Street Journal saying it could go up another 30%, how off are they?
Just as off as the Bank of America was back in 2011 when they forecasted gold to hit about 1,500, where gold hit 1950 US. So they were just under. They lowball. They're very conservative, even lower conservative in their values, all to keep the allure and the squeeze down. The silver squeeze is on, folks, and we know that individuals initially get into this market for insurance, wealth insurance, yes. But once you're involved, you start going down the rabbit hole. You start realizing, what is fiat currency? What is money? What is fractional reserve banking? This is a ticket. Silver right now, physical silver out of the banking silver, is a ticket to financial freedom. People want freedom not only away from the lockdowns, but we want financial freedom away from this Ponzi scheme that's happening. And we all know the only way from this financial scheme of Ponzi schemes is a physical backed currency. If we don't have that, you're not going to get the freedom. So silver and gold right now pose that threat against that type of system. Silver is the Achilles heel, and a revaluation, I believe, is happening. You have countries like China importing 150 tons on its way right now to China. Why? There's a lot of chatter about a gold-backed yuan, but what if the U.S. happens to do that? They have 8,000 tons sitting in West Point and Fort Knox. Unaudited, I know. For me, I would never tell you how much gold I have, so the U.S. won't tell us how much gold they have. But I believe that they have 8,000 tons.
I do believe one day they will open those vault doors and say,
there it is.
There it is.
Exactly.
We don't know where we got it. It could be from, we airlifted it out of Ukraine or Libya or Iraq or the bottom of the World Trade Center, but lo and behold, it's there. So I think ultimately that they will reveal that they've got a lot of gold somewhere along the line. But I think even just opening your eyes, it's not, where people get confused is they just watch the price, right? They just watch the ticker as though that's going to educate them in some way. It's not. Look at what's happened in the last 12 months. We've had 2 occasions where the retail market was completely wiped out a product. You could not buy it for love or money. It was just, I can't get it. Sorry, that's it. There's no more. And the price only went up 45%. Okay? And somehow they squashed that. And the second time they kind of, the banks squashed it. We find out the LBMA, the wholesale market, was potentially 2 weeks away from being obliterated as well. And you can tell, again, if the premiums are high, then the wholesale market is still working off the demand from just a couple months ago. And now, an article you brought to my attention, Jerry, there was an article from Gold Switzerland saying that potentially every physical ounce of silver sold has been rehypothecated up to 1,000 times. Now, this just goes to the importance of having the physical and not having just exposure to the market paper-wise.
So what does this mean? So for every one physical, there is 1,000 shares, and these shares of ETFs and ETPs are not backed by physical?
Correct.
So that's the reason why the LBMA came out with that bogus report. I mean, yeah, they talked about fundamentals for silver, fundamentals, and just to remind the listeners, the LBMA came out with their first ever. Now, this LBMA association has been around for a century old, but the first time they've ever given us a silver report, a silver investment report, and they mentioned that they don't have enough silver, and they tried to quell our interests in silver, saying, "Oh, we have enough, nothing to worry about." I mean, what an effort to try to calm the market.
I know, but
I think it really woke people up, and
Yeah, I think they had an intention there to calm the market, and then when you're telling people we were 2 weeks away from something, you go, okay, so the Silversqueeze people have to look at that and realize, you mean all I had to do was to keep buying for another 2 weeks, maybe?
Yeah.
I don't know, but I think that there's a lot going on. I've noticed as well that there's these entities who've been leasing gold and silver that are no longer wanting to lease it. They're recalling their lease. So not that the product ever left the vault, it's just that they're saying we don't want to lease this out anymore. We need it in our hands, which when everyone's recalling, right? Think about the banks for a minute. If the banks decided we could have a systematic failure here, we better call in all of our lines of credit. And you go online and your line of credit just went from 50,000 down to 30,000. Or it just went from 30,000 down to 15,000. Or all of a sudden you're trying to use your line of credit and they limit you and they say you can only take out this much at a time, right? So that's what we're seeing in the gold market, the physical gold market. They're starting to round the wagons, right? And you can see they're starting to protect their own holdings. Meanwhile, they're still trying to cover for the fact that people still want to take delivery. That's what I think is a big part of what's been happening over the last year, is major financial institutions are realizing, oh my gosh, people want to convert out of this paper. People want to take delivery. We've have all these paper promises. How do we do that? So they go to the wholesale market. They're trying to get that product back in to cover themselves. And I think that's been a big part of the pressure on the market as well. So where does that lead us? How undervalued could this market possibly be? I mean, it would not surprise me if silver went into triple digits. What's that? I mean, Bitcoin's trading in 50,000. It's coming down. But just as an example, the difference is you can buy cryptos in fractions. But there'll be a point here where gold and silver, you just can't buy it. Period. Think about that. I can log on to anywhere and I can buy any stock. They don't say, we've run out of stock. Can't buy any Apple today. Can't buy any crypto today. No, you can buy as much as you want. As much as you want, anytime. But in this market, once you run out, that's it.
That's right. And, I was looking at that. I mean, you and I, we hold crypto. It's all about really diversification, but it's never been something that we want to go too headlong in. We saw a really brutal week so far in the crypto space. It really all happened last week on the weekend, where, the miners in China now, a significant amount of Bitcoin mining is done out of China, as you alluded last week. And but the miners, the mining network, actually knew that the power in China was going to be off, so they actually got ahead and were able to sell into Binance and dumped Bitcoin, and knowing that they're not going to be able to mine. So let's dump. And what happened? We're seeing the biggest, Bitcoin plunged 15% within a matter of hours, dragging the rest of the market down with it. This is counterparty risk. This is immediate counterparty risk that you need to have an asset that is not tied, that is not digital. It cannot be hacked. It's not tied to the power grid. If you want to compare gold and Bitcoin, you cannot. They're two different things. Bitcoin is not gold 2.0. Because you need power for Bitcoin. You don't need power for gold. Yeah, you need power up you
need the energy it costs to pull it out of the ground and form it into that, but it's labor. It's labor per labor versus labor for consistent energy all the time.
Yeah, like a light switch.
I heard an interview with Peter Grandich, who is like the granddad in the gold and silver market, with his newsletter and whatnot. And he was interviewed on Kitco. He was talking about the stock market, and he said for 38 years that he's been in the business, he's never heard the ending that and it all ended with the middle class doing well. In terms of the stock market, it didn't end with the middle class lived happily ever after. He's never seen that, ever. It's always the middle class lost. Because if you're not an insider, right, if you've ever seen the movie Wall Street or Wall Street 2, or the crypto miners, like, you are always going to be the last to know. That's why gold and silver is a bit more simple in that way, because it's just a dumb, easy, keep it stupid, simple metal. It's just, it does nothing. You pull it out of the ground and you store your wealth in there, and that's it. It's been like that for thousands and thousands of years. Meanwhile, gold and silver are both up an average of 11% a year for the last 20 years. But that gain's okay, but they're so undervalued. We're going to talk about how undervalued they are in the next segment as well. The number 18778-SILVER, the website guildhallwealth.com. You're listening to The Real Money Show on Global News Radio 640 Toronto. And we're back with The Real Money Show, the number 18778-SILVER, and the website guildhallwealth.com. So we've been talking about the fact that gold and silver are undervalued. We know where the trends are. We know that the trend for inflation is up. Central banks are buying gold, and that the dollar is going to be falling, that it's losing value all the time. And where is the fair value for gold and silver? I think that is probably the question. If you want to answer how undervalued is gold and silver, you really have to answer what is a fair value for gold and silver. What are your thoughts, Jerry?
Well, gold and silver has always been anti-debt, and what I mean by that is the more that you expand that debt load, the higher silver and gold the potential is for silver and gold. They're opposites. Gold and silver move in the opposite direction. It's the most negatively correlated asset class to the US dollar and then stocks. And that's the simple thing. That's all we need to really know. And as long as you have the physical, you're in the market. You not only decoupled yourself and your money away from depreciation of currency, you're now positioned for that top side potential.
And you know, when I'm looking at what the fair value is for gold and silver, I think there's some very simple indicators that people can look at that historically have led the way. One would be the Dow Gold ratio. That's something that's been around for 30, 40 years. And the idea is that when these bull markets in precious metals and commodities in general, the commodities cycle, which I think it's pretty easy to see we're in a commodities bull cycle now, that it ends at a 1-to-1 ratio, gold to the Dow. That means that in 1980, the Dow was trading at 850 points, and today, and gold was trading at $850. So that was a 1-to-1 ratio.
Right.
In 99, at the dot-com bubble, the ratio was something like 42, 44 to 1, and by 2011, so within the decade, just over a decade, it had fallen from 44, 42 down to 4 to 1. And you know, now I think it's around 15 to 1, 16 to 1. So we could think about 1 to 1 on the Dow and say, okay, if the Dow doesn't fall, that's $35,000 an ounce, give or take. If the Dow comes down 30, 40% and it comes down to 22,000, that's still $20,000 on gold. And if it's a 2-to-1 ratio, that's $10,000 gold. Mm-hmm. And if it's a 4-to-1 ratio, that's still $5,000 gold.
Right.
Take your pick. Which door do you want?
Exactly.
Right? So that's just one idea. The other is comparing it to real estate. And think about it. This is about value, right? So Warren Buffett, price is what you pay, value is what you get.
Right.
This is about value, understanding just how undervalued gold and silver are, even with higher premiums. The higher premium is just an indication that there's a lack of supply, that someone else out there wants it and is getting it, and they're willing to pay the higher price to get that, right? Which boat do you want to get in off the sinking boat than when the music stops? So we can look at understanding value. Now, if you compare gold to real estate, in 1980, you could buy a house in Toronto, in Rosedale, which those houses average something like $5 million, right. You could buy it for under $250 an ounce. Today, you're looking at thousands of ounces of gold. And just a median home in Toronto or Canada, you're looking at probably north of 700 ounces.
Right.
So I don't need to get perfection. I don't need to buy a home for 150 ounces, but maybe somewhere in the realm of 350, even 400. That's going to give me a sense of what the value's at. So, you know, as listeners, go home, play with these numbers. Play with the house number, divide it by the current price of gold in Canadian dollars, and see where you're at and get a sense of where this is going. Either gold is undervalued, housing's overvalued, or it's a little bit of both, right? That's another example. So the other one is the debts, as you were talking, Jerry. The debts, that's the huge. Less than $10 trillion worth of gold is all that's available. That's ever been mined. It's less than 10 trillion. And the debts globally are over 300 trillion and counting, not including derivatives. Trying to squeeze an elephant into a mouse, because when this starts to come down, where is everyone going to go? What do the boats look like? What do the safety jackets look like? They're shining, they're glimmering, they're gold and silver.
And this is the only solution, folks. I'm just going back. Many have held that the return to a fully or partially backed gold standard is nearly the only way out of this financial Ponzi scheme. If you can't inflate assets and goods to remove the debt burden consuming everything, you tie a central currency to gold and inflate the gold price to reduce or remove the debt. And this is the only way out. And this is what's so exciting, that this market is cyclical. We can see the trend going back hundreds, if not thousands of years, and we look back at reserve currency status. The currencies don't last forever. The average currency can last maybe 100, maybe 120 years max. But if you look back in history, you had Portugal, Spain, Netherlands, France, Britain, the US, all had reserve currencies. Something is about to pop. The silver and gold stage is set, ladies and gentlemen, and this is such an exciting time.
The number 18778-SILVER, the website guildhallwealth.com, and one of the ways that you can get into this market is to buy some physical precious metals, and it's so easy to do. You can contact Guildhall directly using the number. You can go to the website. You can even go to our e-store, guildhallpreciousmetals.com, and we really encourage you to start small. Just pick up a few coins, pick up a bar or two, get that into your hand to understand that this is not an investment. This is an acquisition of a physical item. It's an asset. This is where you're going to store your wealth, and once you have that in your hand, it changes your mindset, right? And this is where then you can decide, okay, now I want to move on to maybe put some in my TFSA. Maybe I want to put some, allocate it into my RSP. And at Guildhall, that's what we offer: direct ownership of physical product in your RSP. This means that if you ever decided, I need my gold, okay, there's no convertibility. You already own that gold. You might pay withholding tax to get it out of a registered account, or you don't pay withholding tax out of a TFSA, but you already own the product. So to take delivery of it is not an issue because you already own it. Versus paper versions of it or gold back funds of things where you don't really own that product. And so that's the key for us, is to put that physical product in your hand.
And we love these conversations, Jeremy, helping Canadians move their RSPs over to us. We help every step of the way. So if you have a Lira, an RSP, a TFSA, give us a call. Over a 15-20 minute phone call. Jeremy or myself will help get the ball rolling, help with the transfer department. If we have to contact the institution, we'll do that. And even on the other side, you mentioned if you want to take delivery, we have a letter of direction ready to go if you ever want to do that. But there's a vault. It's fully insured. It's allocated to you. You can visit whenever the lockdowns and restrictions relent, but you can audit in the future if you like.
We've talked about how undervalued gold and silver are. What could potentially be the fair value of gold and silver? In the next segment, we're going to actually put some numbers on that for people so that they can get a sense of what could I stand to gain by having physical gold and silver in my portfolio. The number 18778-SILVER, the website guildhallwealth.com. You're listening to The Real Money Show on Global News Radio 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. My name is Jeremy Wiseman, Vice President of Guildhall, and joining me is Jerry Correia, Senior Broker here at Guildhall. And throughout the show, we've been talking about the value of gold, how undervalued gold and silver are, what is potentially the fair value of gold and silver, and how do you discover that? Now, let's look at where the prices could actually go, because I think this is a very exciting point in the show. You know, Jerry, just over the break, just to give some quick numbers, you know, I don't think gold necessarily has to go to a 1-to-1 on the Dow, but over the years, this concept of $10,000 gold has become more and more accepted as a potential reality. And I can see how that could be a potential reality because, hey, we're close to about $2,000 an ounce in US dollars now. And given the amount of debts that the government has and where all the sloshing about of money, it wouldn't be that much to push the price of gold higher. And of course, they've been keeping the price down. Short term, it's always a short term thing. Long term, gold is up to 11% a year, so it's always the short term. Mm-hmm. But long term, gold has been doing a great job. Now, what would it look like if it went to 10,000? Well, if you were to put $50,000 into gold right now, you'd buy about 20 ounces. So that would turn into about $200,000. Now, I'm going to skip to the really, really good stuff. If we got a 16-to-1 ratio, which is the historic norm,
silver to gold
ratio, that would put silver at $625 an ounce. Sound ridiculous? Not when gold is trading at 10,000. 600 looks really, really cheap.
Easy.
Still really, really cheap.
Mm-hmm.
At 625,000, if you put 50,000 into silver today, you'd buy 1,200 ounces. that 1,200 ounces, putting in $50,000, silver at $650 an ounce, you would have $750,000 worth of silver. Is that an insurance policy that's working?
Is that paying off your mortgage? Is that buying you a home? Again, 1980, you can, with 2,000 measly ounces of silver, just under $80,000 Canadian, you're buying a house. So this is not crazy.
Well, let's do the math on that, Jerry. If we take 2,000 ounces and we're paying $31 an ounce, that's $62,000 worth of product. 2,000 ounces of silver, if we were to get to 625 again, let's use that as the example, that's worth $1.25 million. You're not talking a huge investment in that sense to get those gains.
No.
Have we seen those gains elsewhere? Yeah, and in those places where it exists, those things are completely bubble territory, crowded trades, overinvestment. This is completely undervalued and hard to get. That's the part that blows my mind. How can it be undervalued and hard to get? I just don't quite understand it.
That can't happen. That can't last very long.
No, but there's also one other type of asset that is undervalued and hard to get, and that's natural fancy colored diamonds. Because if you look at the pink diamond market, the diamond market overall has struggled a little bit this year because of COVID. So, you have jewelry stores can't be open, wholesalers can't go to each other's places and things like that. So, but that's starting to change a little bit. If you look at the Fancy Color Diamond Research Foundation and the news that they're coming out, you're starting to see that market perk up, especially at auction, which auction is always a last option. When you're selling a diamond at auction, it's your last option, and so you're not necessarily getting the best prices at auction that you would get privately through wholesalers or other dealers. But the Argyle mine, which produced 90% of the world's pink diamonds, closed at the end of last year. That means no more pinks, period. Now, the Natural Fancy Colored Diamond Research Foundation shows that within the next 50, 60 years, diamond mining will be done. That means you're only going to be depending on a secondary market for diamonds.
Wow.
Okay, for your own generation, that doesn't mean much, but for generational wealth, that should perk up some ideas here on what's going on. At least to pique your curiosity. Well, wait a minute. If in 50, 60 years there will be no diamonds coming out of the ground, it'll all just be what's available at the back of people's safes. What will that mean potentially for the pink diamond market? I mean, even now the mine's closed. The fact that and we know as well through the Fancy Colored Diamond Research Foundation, Jerry, that the yellow diamond market, they've seen a lot less yellow diamonds go into to GIA over the last year.
Interesting.
So that means within the next year, you're going to have even less of those coming to market, right? Because they're not even going into GIA. And as the pink diamond market starts to keep moving higher and higher and higher, you have to move to the next diamond down to get involved, right? It's sort of like real estate. Oh, I can't buy a 3-car garage house anymore. I've got to move down to the 2-car garage, or I have to move into a large apartment. And that's where the yellow diamond market becomes something that can show a lot of potential.
A lot of potential right now. And I remember starting Guildhall, we had one red, we had one blue. The pinks were almost out of our pinks, and the vivid yellows are now catching attention. So this is generational wealth. And this is what is so exciting, is that if you look at the diamond mine, the Argyle mine that is closed, that diamond mine has been responsible for 90% of the world's pink diamonds. And have you seen these mines, how deep into the earth that they go, and the trucks and the excavators that have to go down? If there's a Green New Deal, how are you bringing your heavy machinery down there? It's going to get even more rare to even get the yellow diamonds out of the ground. So this is a very good time to inquire, ask about our diamond discovery session, even a buyer's guide, and we'll walk you through this to show you how a diamond can improve your portfolio with some precious metals attached.
And just to get a sense of the quality that we offer at Guildhall, please go to our YouTube channel and check out some of the diamond videos that we have up there, whether it's some pieces that we've created or even the Argyle Tender diamond that we have as part of our collection. Of course, you can go to visit the YouTube channel to hear some of the past shows. It's been great chatting with you this week. I think we did figure out where the price of gold is ultimately headed and how exciting that is. The trend is your friend in that case. The number 18778 silver, the website guildhallwealth.com, and we'll speak to you all very soon on The Real Money Show here on Global News Radio 640 Toronto.